How's it going, everybody? Good morning and a good day, good night, whatever time frame it is for you guys, whatever time it is, doesn't matter. Just, yeah, I'm here to show you guys the easiest model to trade when it comes to sessions, right? The easiest SMC model, let me clarify that. So, in SMC, what we're obviously looking for, majority of the time, it's going to be placed on liquidity. That's the most important, right? And to begin with, you actually have to understand what liquidity is. So liquidity is always going to be orders that are placed either in sell side or in buy side. Think about it as traders putting their stops in certain key levels that they would think price will then continue going higher, but instead it will reverse. So let me give you guys some examples of it, right? When you're looking at price right here, this is obviously going to be a level of support, right? So right here, we're going to have a level of support for the retail trader, right? This is going to be support. And then, or you could call that obviously demand, right? A level that has hit multiple times over the days and it has started to go up, not over the days, over the hours, right? So it's been rejected. So basically, what does retailology think? They think that once this level breaks, there's going to be a breakout. So they'll have what are sell limits here, right? They'll have sell limits, or sorry, sell stops, and then what they'll do is once price drops down, they'll want to continue selling, but instead there's just orders pending there, or the SMC is actually trying to go the opposite end because all those stop losses got hit. So all those stop losses got triggered. You got stop losses triggered, you got sell stops triggered. Basically, SMC is looking to get everybody stopped out before the correct move happens, right? So here you had, stop losses for the buys. Here you had sell stops for the shorts. So both buyers and sellers from retailology got stopped out, and then SMC obviously comes in, the whale in the room, and takes them all out. So you have that happening, and that's how you can see price go higher. So that's liquidity being grabbed, an inducement, whatever you want to call it. Manipulation doesn't matter, just liquidity being swept, and then you have price going higher. Same thing for the highs, right? You have a level of quote-unquote resistance where price then gets swept, and then breakout traders are looking for the longs. Obviously, retailology got stopped out with the shorts, and I want to go for the longs. And then same thing happens, right? You continue going down lower. Now, for the model that I'm going to show you guys, it's a very easy model to trade, right? Very, very easy model to trade. And I'm going to show you guys now how it goes. So all you need is going to be an indicator, which is going to be called sessions. It's going to be called here ICT kill zone sessions, and you're going to go ahead and just remove both the New York Open, all of that. The model is not always going to form, right? Not every single day, but when there's good liquidity in the market, it will form, and it's a very easy model to follow. I'm going to show you guys 3 trades. Out of those trades, I took 2, but I'm going to show you guys how the trades went, right? And these were taken on Tuesday and on today's day, Wednesday, right? So for the first trade, again, if we look at the model, what you want to do is just stick to the M15. So you want to stick to M15, and you want to obviously look at your sessions. We're going to go back and we're going to analyze it like this. So I'm going to go ahead and remove all this. Go back over here. This is a very easy to trade to spots, easy to trade to take. And if you guys want to go back and look at the model, it's going to be on the it's going to be on my Telegram, on the free Telegram. You guys can go ahead and tune in and look at that there on Forex Funny or on Chart Monday, whatever you guys want to see. So this was on Tuesday. When I woke up, the market had opened up in these lows right here. Sorry, my dog is going crazy here. I don't know what's going on with him. But anyways, moving forward, we had a level of liquidity here again. So where's the liquidity going to be placed? It's always going to be placed around the sessions. So you want to go ahead and make sure that you understand your sessions. So session here, you have your one level here. Let me go ahead and write this back down my magnet so I can put things that, I locked it by accident, sorry. Here's the magnet that I needed. And then you obviously have this right here, right? Sessions. Okay, so you have our lower height, you have your level of liquidity up here, and you have a level of liquidity here, sessions, right? Market opened up and then took these lows here. This was going to be at around 7 in the morning. We took the lows. The market continued going higher. And then you can see you have an order block here being placed. Now, this liquidity has already been grabbed, so we can already confirm that this liquidity has been grabbed. We're not really looking for structure. Obviously, structure is better. You obviously want to continue with the structure. Like, let's say you're in a bearish trend, you want to go for the sweep high, and then you want to go for the short. But you could still trade both sides. Again, all the main point is just looking for liquidity. So looking for everybody to get subbed out before you can get in. So Asia and London are very clear signals of showing you that. Why? Because think about it as orders just being accumulated, a lot of orders being put from both the buyers, the sellers, and then SMC comes in New York and just smacks them, right? It smacks them and then it goes to its original move. So this trade here, M15 liquidity swept here. I'm just looking out for these liquidities to be grabbed. We have London highs here for the previous day and Asian highs for the previous day. And how this trade was taken was as simple as this. I'm looking for the same thing. I saw a structure break at the bottom. So again, the same things. This is how you know that price is basically fractal, right? The same models that I'm looking for on the bigger time frames, like on the M15, I'm looking for it on the M1. So I go ahead and I saw this, right? So instead of obviously it being sessions, it's now just structure. You have your lower high points and you have your higher points here, right? So if we were to go and look at this on M15, this is basically the same thing that happened on M15, right? You had the lows being swept here. Make sure you guys understand this. You had the lows being swept here, and then you have a push up higher where highs are yet still to be taken. So now all you're looking for is an entry model. And my entry model is like this, right? You have an order block with an FEG, very easy trade to take, very easy trade to spot, and voila. Now you go ahead and put your longs here. My stop loss was around there, and it was a 2-to-1. Nothing crazy, right? Nothing crazy. Market hits, your entry hits, and then it goes to your TP, right? If you wanted to continue that running, that went all the way down to a 5R, but again, I only trade 2-to-1, so it was something around that, right? We can go back on my Telegram if you guys want, but again, just it's not about the trade or the the 2-to-1, 3-to-1, 4-to-1s, whatever. It's just about showing you guys the model. So the model is simple. You're looking for that session to get swept, and then you're following the same model on a smaller time frames, and then you have to build an edge on what are your entry confirmations. It can be anything. It can be a sweep of liquidity. For me, it's just a break of structure and then an FEG plus an order block, which is what you had here. We had a sweep, a break of structure, order block, FEG, and then entry, right? Easy trade to spot, and you can see the highs over here then got swept at the Asian London highs and the Asian highs from the days before, right? Now, for the second trade, we can go ahead and drop down. Sorry for my dogs. Hey, yeah. So for the second trade, we can go ahead and drop down to a US 500, right? And very easy trade to spot as well. Again, all we're looking for is the same thing. We're looking for the highs to get swept, and that's what we had here. If you look at the model here on US 500, we had the exact same thing to the left, right? We have again Asian highs, London highs, then we have the lows here being formed, and this trade was taken in like this. Very easy trade to spot. You can see here we drop down to the M2. You have again a break of structure, swing low, break of structure here, FEG, and then you're looking for the drop down, which is what we had right there. I'm sorry, the magnitude was being a pain, but you can see there, once we broke the structure, we had then market dropping down to grab obviously these levels of liquidity. Now you don't need, this is going to be a little bit more complex, not really, but obviously you can just go for the 50% of this range. Like, you don't need obviously the entire range, because sometimes market will just go to that 50%, and you can see I reject a little bit, and that's more than enough, right? Obviously, if you want to follow with the entire model, then yes, you could drop down to the level of structure. Again, to me, it's just being greedy because this is already more than a 2-to-1, but market did drop down and take off then on the lows. Again, this is just a model to follow when there's a lot of liquidity. So there's going to be liquidity in both ends, the buys and the sells, but you're looking for Asian London highs to get swept, then a break of structure, and then an entry model to follow. And then this is what continued happening. You can see how from there, price continued, and just swept those lows drastically, right? A little bit of push up again, and then continued sweeping the lows once we tapped that 50%, induced people, and then dropped down and swept the London lows, right? So very easy trade to spot. Now let's go ahead and go for today. So what happened today? Well, again, there's a lot of liquidity today, so basically the same thing, right? Basically the same thing. If we look at the M2 and the M1, Asian highs, London highs, you mark those levels off, market came up, swept them, give you a nice push of structure, displacement, breaker right here, and then we had the drop down, right? US 30 was probably the easier trade to take, right? Because you want to be looking for obviously something that's very obvious to spot where you can capitalize on the market. So where would that be? That would be around these levels, right? Asian highs, London highs. You can see how we had a big sweep of liquidity above. From that sweep, then we had a displacement to the downside right here, right? We broke structure, so we broke the swing high. Then we have that order block right there, clean order block to spot right there with the FVG, and again, you can see how from there we dropped all the way down 50% of the range. If you want to, right, you don't need the entire range. You guys are going to see how even if we just write from this low to this high, 50% of this range right here is right here, and that would have been a 4-to-1, right? I'm not saying that you need that, but just to understand that even if you know, however you want to write range, it could be from sessions or it could be from your swing low to your swing high. Even if you were to put it around there, that was still a solid R, right? That was still a solid 2.75 to 1. For me, I only go for 2-to-1s, but again, same thing. Let's say you miss this trade. Let's say you miss this trade and you want more confirmation. Again, what you're looking for is obviously going to be this target. So you're looking for Asian on the lows to get grabbed. So you have multiple entries here. You can see how we continue dropping. We made a lower high point to a lower low. So what you're looking for in this swing, from this lower high point to this lower low, if you want to get a better entries, you're obviously looking for a level where price is now going to be oversold in a level of premium. So I'm going to go ahead and go to my M5. I don't see anything here, right? I'm going to drop down to my M4. I don't see anything here. I'm going to drop down to my M3. I don't see anything here. I'm going to drop down to my M2. And in the M2, I start seeing a little bit better of structure, right? I see an order block here. There's still no FVG. So to be honest, this wouldn't have been any kind of clear entry because there's no FVG here. If we're looking at the M1 here, the FVG is placed right here and a little bit above. So this would have never triggered us in as far as this model goes. Like we had a sweep of liquidity. We tapped into this FVG, but we never tapped into the FVGs up here. I wouldn't have gone into this entry. But you can see here, right, price continued dropping and finally took off the London lows. The model is more based on the top. You want to focus on it once it sweeps those highs or once it sweeps those lows. You're looking for an entry point like this and then continue dropping, right? Very easy trade to spot. Same thing with US 30, swept the highs and then continue dropping. Not as clean as ever because again, you want to be looking for a clean sweep where it obviously makes sense. All index pairs are going to be correlated. So at the end of the day, not one. As long as one sweeps, you could be looking for that correlation with other pairs. So obviously, US 30 had that big sweep. US 500 kind of lagged behind, but it still gave you a little bit of an SMT where it was showing you that price is weaker and it wants to continue dropping, right? So, I mean, yeah, again, easy model to follow. It's not that hard. M15, Asia, London highs, look for the sweep, then go to the M1, break of structure. Sweep has to be a displacement, of course. Look for the break of structure in the M1, then follow through with an FEG plus an order block, and your entry is there. Go for the 50% of that range, or go all the way to the London lows. It's up to you, right? Backtest that model, follow it, and you guys will see how it does end up working out for you guys. But yeah, I hope you guys found this video informative. I will see you guys in the next one. You guys know how it goes. Don't overtrade, don't overleverage, take trading, and peace.